and welcome to our webinar today where I'm going to be discussing investing with limited funds. My name is Larissa Greene and I'm excited to talk about this topic because a lot of times people will say to us, I just don't have hundreds of thousands of dollars to invest in a self-directed IRA. So we're going to take a look at different investment opportunities that we have seen over the years at Advanta that don't take a whole lot of money. So we're going to be talking about starting with maybe a contribution or money left over in an account after making a larger investment. Again, my name is Larissa Greene. I've been with Advanta IRA for almost 12 years now, and I started sort of doing different things for Advanta like transactions, coding checks as they came in, so income on IRA accounts, paying expenses, receiving income, all of the different things that are sort of going on in the background with Advanta and self-directed IRAs. And then I moved over to marketing and business development probably about 10 years ago now, and I've been doing that ever since. So I do presentations, I do a lot of networking. Some of you on the webinar today, they know me from some of the networking events that I attend. If you have any questions after this webinar, please feel free to reach out to me. My contact information is here. I do also want to let you know that the slides are uploaded as a handout for your convenience, so you're welcome to download those for reference later or to follow along and make notes. This also will be recorded, and we will make sure to get this recording out to everybody once the webinar is done. It takes about 24 hours or so. If you guys have any questions during the webinar, please feel free to type them into the question box, and I'll make sure to get those answered as we go, and I will look at questions again at the end of the webinar. Advanta IRA does not provide investment, legal, or tax advice for any purpose. If you have any questions, please feel free to ask them, but if it's something I can't answer, I will let you know, and then we can also possibly refer you out to an attorney or CPA if you don't have one of your own to consult with. As we go through, we'll talk a little bit about prohibited transactions and the rules for self-directing IRAs. And we're kind of going over IRS rules there, but if you ask us something specific about a specific investment and we can't answer it, we will let you know. Again, something important to know is that you don't need hundreds of thousands of dollars to self-direct your retirement account. It is actually something that people approach us about a lot. We're going to talk about different strategies that we have seen and also different techniques used in self-directed IRAs that allow people to make investments of their choosing, even though they can't, for example, buy 123 Main Street with the funds in their account. Remember that you choose the investment. Advanta IRA doesn't sell any investments at all. We simply hold the account. You find the investment and we help you get it done in the name of the IRA. And you can invest in any number of alternative assets. So a lot of times people will say to me, well, once I set this up for real estate, can I also buy precious metals or cryptocurrency? And the answer is yes, this account is self-directed and can hold any number of asset classes that you choose. Advanta IRA has been in business for just over 20 years now. This was our 20th year anniversary, I'm excited to say. And we have two offices. We're here in the Tampa Bay area of Florida, which is where I'm located. And then we also have an office in Atlanta. Everything is handled really through our Largo or Tampa Bay office, and our Atlanta office is a marketing office where we host events and we have associates out there meeting with clients when they have questions. We can help anybody nationwide and even worldwide. So if you have a US-based retirement account and you're looking to self-direct it, we can help you anywhere that you're located, even if you're located out of the US. And we have clients investing nationwide and even worldwide. We have over $2 billion in assets under management, and everybody with us, regardless of whether you're investing $1 million or just a couple $1,000s, will receive a dedicated account manager, somebody that will be assisting them with their account from start to finish and any questions you have in between. If you haven't heard of a self-directed IRA before, it's just very simply that there's not a lot of administrators out there like Advanta willing to hold private investments. Brokerage firms typically consider these assets hard to value and are unwilling to do the record keeping for assets that are outside of the market, and that's really where we come in. We just simply fill the gap in the industry for private investments, and actually the opposite is true for us. We don't handle anything market-based. We simply hold private investments. We help you do the market, the record keeping for those investments, and we do the IRS reporting. A lot of times people will say, well, my 401k is self-directed, but I can't buy real estate. Why is that? A lot of times the 401k where you're currently employed doesn't allow you to move money outside of what they offer within that plan, but it doesn't hurt to ask. We're seeing more and more that plans are allowing 401k holders to move at least a portion of their funds in order to self-direct. We hold any type of retirement plan. If it ends in IRA, a lot of times people will ask me why you can only self-direct a Roth IRA, and actually that's incorrect. If it ends in IRA, it can be self-directed, and that includes your typical retirement accounts. So traditional and Roth IRA, of course, are the most common retirement accounts that we see probably a lot of times because, for example, with a traditional IRA, people will roll over funds or move money from an old 401k or employer plan to a traditional IRA just simply because they are treated the same for tax purposes. Typically, if you had an old employer plan that had some Roth money or after tax money in it, it would go simply into a Roth IRA. And so those are going to be the most common types of retirement accounts that we see, but we can also help you with SEP IRAs or simple IRAs. These are employer-based plans. We also have a solo 401k that we offer. And if you have an old employer plan, that can absolutely be rolled over to like a traditional or Roth IRA. You'll see up here I also have health savings accounts and education savings accounts, and these accounts are treated the same as far as how they make investments, and so we can hold these as well. And we just kind of came up to the tax deadline where we were seeing a lot more traditional Roth IRAs being opened up, as well as health savings accounts and education savings accounts for making last year's contribution. So we're beyond that deadline now and looking ahead to 2023. So if you're thinking about starting an account, now is the time, as they say, today is the day. So you can look at these accounts and make your contributions to them, and then look at the types of investments we're going to be talking about in just a few minutes. So I have up here investment options, and of course this is not by no means the only the list to choose from. Essentially, the IRS allows a very large range of asset classes and strategies within retirement accounts, but we're going to be talking about these types of investments today. And if you have any questions on any other asset classes, please feel free to type those into the question box. But we're going to focus today on things like real estate options and tax liens. These are, of course, what I would consider the paper side of real estate investing alongside private lending, which isn't always tied to real estate, but oftentimes is. I'll talk a little bit about cryptocurrency and foreign currency and futures trading, precious metals, and then partnering IRAs. So again, this is not the extensive list of investments that you can make within an IRA, but this is what I'm going to focus on today when you're using limited funds to make investments. Just be aware when you're looking at different structures and asset classes you're thinking about investing in that there are going to be some prohibited investment or asset classes along with prohibited transactions. And then there's also times that tax does actually apply to a retirement account. So the only two asset classes that you can't invest in with a self-directed IRA are going to be life insurance and collectibles. And you can invest in precious metals. So I know you're probably seeing coins up there in that list of collectibles that are not allowed. And really the distinction here is whether or not the precious metals or those coins or whatever it might be that you're looking at investing in, if the value of those coins is based solely on whatever the metal might be trading at, then that's probably going to be something you can invest in through your IRA account. But if the coin, for example, if that value is based on it being rare or old or antique, then it's probably something that you can't invest in order to through your IRA account. So just keep that in mind. And I do believe that actually the IRS does have a list on the IRS website of the different coins and metals that you can invest in, so you can always check that out. But outside of that, just about the sky's the limit. But some things you do need to be aware of are people that you can't transact with. And that's very important when it comes to your IRA, because you're really looking at investments for investment purposes with arm's length transactions, meaning that you can't lend yourself money, for example, or invest in your son's business. These things would be prohibited. And I have a slide coming up that will really help you understand who might be considered a disqualified person when it comes to your IRA. And then just be aware that sometimes tax does apply to investments in your IRA. A lot of times people will say, well, this is tax free or this is tax deferred. And in most cases, that is true. But if you're investing in a business with business income being returned to your IRA or 401k, then unrelated business income tax would apply. And then also, if you're purchasing real estate in an IRA and using financing. So the financing is what would trigger this tax. If you're purchasing in cash, then it would not apply. However, if you're investing in financing applies, then for an IRA, at least unrelated business income tax will come into play. And if you have questions on that, the very best person to answer your questions will be your CPA. But certainly we could send you some information to share with your CPA, or if you need a referral for a CPA, please do let me know. So here is a good illustration of who is considered a disqualified person when it comes to your IRA. And you can see right here on the screen, the IRA holder is a disqualified person, meaning again that you can't lend yourself money, for example, or purchase a piece of real estate that you intend on living in or using as a vacation home. These things would be considered prohibited. Your spouse is also a disqualified person, and then parents and grandparents, children, grandchildren, and any spouses or business entities of those. And that's very important. Again, remembering that in the rules, the IRS says this must be an arm's length transaction when you're dealing with your IRA, and you cannot have a current benefit, nor can any of the individuals listed here. And a current benefit, again, would be, for example, staying in an IRA owned property or investing in a business that is going to allow you to have a promotion because you made that investment, for example. So we could really get into the weeds here on what would be considered prohibited. But if you have questions on that, let me know. We do go more into disqualified persons and prohibited transactions in other webinars, and I can certainly send you recordings for that as well. We had a question pop up: if you need an LLC to invest in tax liens. You did not need an LLC, but a lot of times people will look to an LLC or a trust to ease these transactions, and I actually do have an example of that today in the webinar, so we'll get to that shortly. The LLC essentially would be owned by the IRA, and again, I'll talk about that more. And you can also use a personal property trust, and the structures for those two are going to be a little bit different. So I'll just touch on that, but we do have whole webinars dedicated to checkbook control, which I'm happy to send you if you just want to send me an email or give me a call. We can make sure to get that information over to you. So transaction basics are things you should be aware of if you haven't invested with a self-directed IRA before. Very simply, investments, regardless big or small, are going to be in the name of the IRA. So Advanta IRA Services, LLC, FBO, John Doe, IRA number 1234567. So basically saying that the IRA is making the investment, not you personally. And that's very important for IRS purposes. A lot of times we receive transaction paperwork and it actually has the IRA holder listed as the investor instead of the IRA. So we help them get that corrected so everything is reflected properly, showing the IRA is making the investment. Remember again that Advanta doesn't sell any investments at all. We hold the account, you find the investment, we help you get it done in the name of the IRA. So when we receive any investment paperwork, we're going to review it. We're really not doing any due diligence at all here. We're not going to let you know whether or not this is a good or bad investment. So that's a conversation to have with your attorney and CPA. What we're looking for here very specifically is that titling listed in the first box here. Once we have that all done, we're going to send all of the investment paperwork to the IRA holder through DocuSign for them to read and approve it, basically saying, yes, I've reviewed all of these investment documents. Please make this investment on my behalf. And then the IRA will not only fund the original transaction, but depending on the investment, it will also pay expenses of the investment and receive income. Remembering that your IRA it's basically your business partner. And so your business partner is making this investment. So it will be responsible for all of the expenses associated with the investment, and it will receive all of the income. And the only exceptions here will be when we talk a little bit about partnering strategies and how those work. Your strategy is your own. We take your direction when it comes to any investment you're making in the account. So you're going to basically bring all the paperwork to us and say, hey, I have this investment that I would like to make through my IRA. And then we simply help you get it done. And IRAs can partner, and we'll talk about that. And you can even partner with people your IRA can partner with your spouse's IRA, for example, so even disqualified persons can partner, and I'll talk a little bit about that as well. So the first investment strategy that I want to talk about is tax liens. So just keep in mind, again, that ultimately how you set up this investment is going to be up to you. I'll talk a little bit about checkbook control and the pros and cons. And again, I have whole webinars there where we can absolutely send that over to you. So the first thing is going to be when you're working with tax liens, it does depend on the state you live in and then also the county on how this will work. This is something that you definitely want to learn more about depending on the state you live in, because some states are tax lien states and some states are tax deed states. Here in the state of Florida, we're a tax lien state. So what that means is that when tax liens go up for auction, people bid on them. They're awarded the tax lien, and then they hold that lien until the property owner pays off that lien. In the state of Florida, the lien holder is not awarded the property, and that's the distinction between a tax lien state and a tax deed state. What happens is the IRA, the lien holder eventually could potentially push the property to foreclosure. Once it's bid on at auction and sold, then the lien holder will get paid back, as well as potentially any other lien holders for that property. And so that is a big difference. And so depending on the state that you live in, the process might be different. So the first thing is you want to learn about how your state holds liens, tax liens or tax deeds. Check with the county to find out what their process is for making this investment. Again, that is going to be very specific to the county that you're investing in. We have clients invest in a single county because they know the process, or they invest in multiple counties and across multiple states. And so knowing what the process is and how the state holds the lien is going to be very important here. Advanta IRA is not going to advise you, so you need to be familiar. That's going to be a part of the investment process. The county will hold your account or profile in the name of the IRA. So typically the county will have you set up a profile. You'll do that with that specific titling that we talked about, Advanta IRA, for benefit of your name and your Advanta IRA account number. If the county requires a deposit before the auction, then the IRA will make that deposit and we'll work with you in order to do that. And then any tax liens awarded after auction will be paid by the IRA. So you'll alert your account manager and the IRA will fund that transaction and hold certificates. You can use checkbook IRA, and there are pros and cons to that. When you have checkbook control of the IRA, it's easier to engage in a prohibited transaction. You would ultimately be responsible for all of the record keeping of investments within that LLC or trust, and you want to make sure that you're setting up a brand new LLC or trust for the purpose of investing through the IRA. The way that it would work with an LLC is just very simply, or a trust, very simply, once you have that established and the IRA is shown as the owner of that entity, then that entity would have a checking account and the tax liens would be invested in the name of that entity. And I'll talk more about that in my example. The next real estate strategy we're going to talk about real estate options. And many times people aren't familiar with real estate options, and I would definitely say that this is more of an advanced strategy for investors. So if you're looking at learning more about this, there's a lot of information out there, and there's also classes available for real estate options. But essentially what a real estate option is the right or option to buy a property at agreed upon amount at a later date, with a fee paid to the property owner to obtain this right. So meaning basically that if I met John Doe and he was looking for capital for his property for one reason or another, let's say that he needed to put a roof on the property, but he didn't want to sell it and he did not have the funds to do that, then I, as the IRA holder, might say, well, I'll pay for the roof if I can have the option to buy this property in 10 years for today's price. And what I'm doing basically is securing the equity on that property 10 years from now. And, you know, looking at the real estate market, that could be a tough thing to judge on what the property will be worth, you know, today versus 10 years from now. And so again, this is something I would consider an advanced strategy. The option is in the name of the IRA, and the fee is paid from the IRA to the property owner for this right. Please check with an attorney to find out more about ways to secure the option. So how do you let people in the public record know that you have an option or the right to buy this property should you execute that option in the future? And when and if the option is exercised, the IRA can sell the option. They can bring in a non-disqualified partner to purchase or get a non-recourse loan to buy. And again, this is really all sort of based around the fact that this IRA, or the example we're talking about, the IRA is working with limited funds. So of course, if the IRA had all the cash to purchase the property when the option is exercised, then it could certainly do that. But again, if you're working with limited funds, and let's say you use $10,000 to purchase the option and the property is valued at $200,000 when the option is ready to be exercised, then the IRA holder can again sell the option so that somebody else can exercise it. They can bring in a non-disqualified partner to purchase the property. And this is important because this would be a transaction, and so the IRA holder cannot transact with somebody considered disqualified. So spouse, parents and grandparents, children and grandchildren. So keeping that in mind. Or again, the IRA holder could potentially get a non-recourse loan. It has to be considered non-recourse in order to purchase the property. And then if you think back a few slides back, you'll recall that if the IRA does get a non-recourse loan to purchase, that would trigger unrelated business income tax. I had a question pop up on whether or not the IRA title or name has to include the IRA holder's name, and the answer is no. You can certainly leave your personal name off, and it could be Advanta IRA for benefit of IRA number 1234. That is certainly acceptable and a way to gain maybe a little bit of anonymity there. I have a few people sending me their email addresses for more information on different webinars that we have. If you would, please use my email address and send me an email because I don't typically pull all that information off of here before we close out the webinar. So I will put my email on the screen again before we close out the webinar. So the next thing we're going to talk about is private lending and how that works. And we typically think of a traditional loan at 30 years with financing on a property, you know, and that it would take large sums of money to make these investments, but that's just simply not the case. An IRA holder can lend money at just about any rate with just about any structure. Again, just making sure that you understand your state laws on what interest rates can be, or basically usury laws. But you can lend $5,000, you can lend $10,000. It could be a first mortgage, a second mortgage, a third mortgage. It could be considered unsecured. Advanta IRA has seen people lend money on cars and boats, farm equipment, even farm animals and livestock. And so all of these things are acceptable, but make sure that you understand the investment that you're making prior to making it. And this is a good time to include your legal team to find out more about, you know, things like unsecured loans. How do you collect if that loan goes unpaid, or something secured outside of real estate? How can you put people on notice that you have a lien, so to speak, on something like a piece of farm equipment, or, you know, livestock, for example, or large machinery, things of that nature. Again, the structure for the private lending is your own. So are there monthly payments? Is it a single payment note? What is the interest rate? And what are the terms of those loans? And so we do a whole webinar called Be the Bank, where we talk about different strategies that we've seen for note investing. And that is something that does not take, you know, $100,000, $200,000. You can lend out $5,000 and have it secured by a car, or you can lend out $10,000 unsecured to a friend's business, startup business. There's lots of different ways to invest through private lending. I had a question pop up. Do we offer a money market account? We do not. Your cash does not earn interest with us if it's just sitting in cash. And so these are strategies to look at if you're making a larger investment and then you have, you know, maybe some dividends or income that are going to come back to Advanta IRA and then just sit in a cash position. So it's a great way to diversify your portfolio and also put that money to work. So the first example I'm going to talk about here was tax lien investing. And so I know I mentioned this too, and this will give you the opportunity to see what that structure looks like, and then also how checkbook control of the account potentially works when you're investing in tax liens. So Dora takes a class on tax lien investing and wants to put her knowledge to use. she decides to start with her annual contribution to make this investment. So tax liens are a great investment for smaller accounts because they can be just a couple $100s to a couple $1,000 and probably more than that. But you can start with just a couple thousand in order to make the investment. So she's going to open and fund her Advanta IRA with her partial contribution of $3,500. And if you guys are looking at this, this might sound a little familiar, on maybe making your contribution to an HSA as well. So if you have a health savings account just for yourself, not a family plan, then your contribution is just going to be a little over this. And so if you're starting your HSA this year, what can you put your funds to work at? Well, you could certainly invest in tax liens and private lending and all the things that we talked about today so far. And in this example, it just happens to be an IRA. So she's going to make a partial contribution with Advanta. She submits a purchase authorization form to Advanta IRA, giving us permission to send a deposit to the county. So she first works with the county to find out what type of deposit they require and how to get the money over to them. She'll find out from her Advanta IRA account number what the title of her IRA is to make sure that her profile with the county is in the name of the IRA. Once we receive her purchase authorization form for the deposit, we will go ahead and fund the deposit with the county. And then she's going to work with the county in order to purchase liens at auction. So I know it's a very exciting time at Advanta because tax lien auctions in our local area are at the end of May. So we're going to be getting a lot of requests for deposit with the county at that time so that people can start bidding on tax liens with the counties that are local to us. Once she does that and she's awarded tax liens, she's going to again work with her Advanta account manager to make sure that the remainder of any funds that have to go to the county for the purchase are sent over. And now her IRA holds those tax liens in the name of the IRA. So once the tax liens are established as an asset of the account and they are paid off probably over time, then the county will remit the payment to Advanta IRA directly, and Dora will get an email from us letting her know that we deposited the amount from a tax lien, and she can reach out to us and verify which certificate was paid off and check it off her ledger. And once the certificates are paid off in full, she'll alert Advanta so that we can work with her to remove that county as an asset in her account. So we do it by county. So we're located here in Pinellas County, for example, and so if she bought 10 tax liens in Pinellas County, that's how she's going to see it on her statement. And then once the 10th certificate is paid off in full, she's going to let us know, and then we're going to work with her to remove Pinellas County as an asset in her account. So how does checkbook control work when you're investing in tax liens? Well, you can do it one of two ways, either with an LLC or a trust. These strategies are different because if you're using an LLC as the account, as the IRA holder, you certainly could be the manager of the LLC if you choose. But if you use a trust, you cannot be the trustee of the trust. And that's important to know that you would have to have a non-disqualified third party act as trustee. But it still does give you the ability to have a checkbook or checking account for the IRA owned assets. And so we're going to use an LLC as an example. Dora in this case would set up an LLC, and she might name it Sunshine LLC with herself as the manager. She would turn in the operating agreement with the IRA as the only member or single member of this LLC and her as the manager. We would review it to make sure that it is properly showing the IRA. And then we would send her all the documents she needs through DocuSign to approve and give us permission to send the money to the LLC checking account. Dora, as the manager, will set up the LLC checking account in the name of Sunshine LLC. So that's important here. It's not going to be in the name of the IRA. It will be in the name of the LLC. And then we'll fund the LLC checking account. And now Dora, as the manager of the LLC, will work with the county and have everything properly titled in the name of the LLC. And when tax liens are paid off, the county will send the payments back to her LLC, and then she's ready to start investing again. And nothing has to go back to Advanta at this point. She would simply receive the funds, deposit them into the LLC, and then at the end of the year, she'll let us know what the value of that LLC is. So I don't see any questions, but guys, Keep those questions coming. We're going to talk now about cryptocurrency, precious metals, and futures trading. And none of these investments take hundreds of thousands of dollars. You can certainly make these investments with your annual contribution or any funds sitting in your account left over from a larger investment. So cryptocurrency, of course, is an investment that we see a lot more of in recent years. People have a lot of questions on cryptocurrency. We also have a ton of webinars on cryptocurrency investing specifically, so we're just going to talk a little bit about it here today. But the IRA can invest in cryptocurrency on a platform or exchange as long as the profile, again, is in the name of the IRA. So you're probably seeing a constant theme here. Every investment is going to be titled in the name of the IRA, so that's going to be very important. The biggest thing with cryptocurrency exchanges and platforms is that oftentimes they really don't understand the IRA titling, and so before you get too involved with a specific exchange, I would find out if they're going to allow you to hold your profile with them in the name of the IRA. If they're not sure and you're not sure and you have a contact over at the exchange, I'm happy to talk to them for you. Sometimes it's difficult, I know, to get somebody on the phone or on chat with a cryptocurrency exchange, but if you do have someone you're talking to and working with, then we're happy to reach out to them as well and let them know, hey, this is how the IRA would be titled, and the money would come directly from the IRA for the investment. You want to make sure also that the platform or exchange will accept a third-party wire, because that sometimes is a little bit of a roadblock as well. So basically meaning that the wire is going to come from Advanta IRA, not an account in your name personally. And then the wallet will also be in the name of the IRA. There's that titling again for you. And then you obviously have options for how you store your cryptocurrency, either hot storage versus cold storage. The biggest thing for us is that if you are going to have the investment held online in a wallet, it would be again in the name of the IRA. If you're going to do cold storage, then you would typically use an LLC or a trust, because Advanta does not want to hold your cold storage, drive in order to do the hold, I guess you would say, holding of that investment. So typically you're going to see an LLC or trust set up, again, giving the client or IRA holder checkbook control, and then ultimately you would be in charge of the cold storage for that investment. We leave that up to you as to whether or not that's something that you want to do, and we recommend talking to your CPA or attorney if you're looking at cold storage investing through for cryptocurrency. The next thing we're going to talk about is precious metals. And the IRA investing in precious metals is something that we have pretty much always seen at Advanta. The IRA can purchase precious metals. You work with a dealer of your choosing. We don't, recommend or work with a specific dealer. It's completely up to you to find the dealer that you want to make the purchase from. Make sure you're doing your due diligence on the precious metals dealer that you're going to work with, and then the purchase is made in the name of the IRA. The depository, Advanta is not a depository, so that's important to note, but you can choose the depository that you want to work with, similarly to the way you choose your dealer. We have 8 that we work with, and we can give you that list if you're looking at precious metals. And then we would basically work with the dealer to make sure that everything is properly titled. We send out the money in order to fund the transaction, and then the dealer works with the storage facility to get the precious metals shipped there, and then everything is held in the name of the IRA. Just make sure that you know that the storage will also be in the name of the IRA, and that there is going to be an annual storage fee on top of Advanta's annual fee as well, and we'll work with you to make sure that that gets paid. Futures trading is actually very similar as far as the structure of it to cryptocurrency. You want to make sure that any platform or exchange is going to allow the IRA to hold the profile, so the profile in the name of the IRA. And the IRA holder does the trading, just as in cryptocurrency trading. And we don't advise on any of these investments, and we don't handle any of the trades. A lot of times people say, well, once I set it up, who's going to do the trading for me? And that's actually the IRA holder. We don't handle any of that. But we do work with the exchange to make sure that everything is properly titled. again, in the name of the IRA, and then we fund it for you and we take your direction. And if you're just, continually trading, you can keep your money over with the exchange in order to do that and report the value back to us annually. I had a question pop up on how payments are made back to the IRA. Is it ACH? You certainly can have payments made by ACH back to the IRA. I think the biggest thing with an ACH payment is you just want to make sure that the payer is including the IRA information. So sometimes people aren't sure how to do that, and we can certainly give you ACH instructions to provide the payer so that they can make sure to include your name and your account number or your account number so that when we receive that ACH, we know who it belongs to. But certainly they can mail a check or send a wire, but of course, you're going to have an incoming wire fee if you have, any of your investment providers or payers send wires to Advanta. I have a case study on precious metals and how we have seen that done. I had a question pop up, so give me just a second to review it. Okay, so I had a question about smaller accounts and the fees. And this is a great question because this is a question I get a lot. So if you're starting an account with a smaller amount, you are going to have fees due to Advanta. That's the only way we earn our keep. We're a fee-based company. And so when does it make sense to make a smaller investment but also incur fees that Advanta charges? And honestly, the answer is I don't have an answer. I think that that's sort of a personal decision that somebody has to make. I mean, certainly if you're lending money, you can pass our fees along to your borrowers in order to make up that difference, especially if you're lending smaller amounts, depending on the interest rate. Of course, the interest rate versus the fees, that's something you're going to have to look at. And something you have to take into consideration. And so what I normally would say is it's a personal decision. So like looking at the expense and see if that outweighs, how much you're earning. But there are a few different options on the fee schedule, so we can hopefully help you navigate which option would be the best and then go over what the fees would be for this investment, and you can decide, whether or not the cost is worth what you're looking to do. So precious metal investing, this is actually a very easy transaction. The biggest thing, and everything, of course, is going to be up to the IRA holder, but the biggest thing is going to be finding the dealer that you want to work with and also deciding on the depository that you're going to use. And again, we don't advise on this. And so when you're looking at this, just making sure you're doing your due diligence on the dealer and finding out more and learning about the depository. And if you have any questions about depositories, you certainly could reach out to us. And if we can't answer them, we'll let you know. But we do have 8 that we work with. So in this example, Sam has funds building up in his IRA from dividends of another investment, and he wants to get those invested. And as we talked about earlier, if he does not put that money to work, it's just going to sit and not earn with Advanta. So who does what? Sam is going to find the dealer he wants to work with and does his due diligence. He submits a purchase authorization form and has the dealer send the purchase forms to Advanta with his IRA listed as the buyer. And this is sometimes just as simple as an order. I guess it's an order form for the precious metals that he is going to purchase, and it's going to show his IRA as making the purchase. He's going to choose the depository he wants to work with and let the dealer know so that they can work together to set up the shipping from the dealer to the depository. Once that's done and all the forms are turned into Advanta, we'll put it into a DocuSign form for Sam to approve, and he's also going to fill out our purchase authorization form, giving us permission to make this investment on his behalf. Once he's done that, we're going to fund the transaction and then work with Sam to pay the annual depository fee. So just again, remembering that Advanta's fee is not the only one he'll have annually. When you're working with precious metals, he'll also have a depository fee. If Sam decides to sell the precious metals, he'll find a dealer to sell them to and alert Advanta so that we can work with the depository to release the precious metals to the buyer. And then proceeds from the sale will go directly back to Advanta. Sometimes people will say, well, what if I want to distribute the precious metals to myself personally? Then basically we would work with you to have you complete a distribution form that you would complete requesting that we distribute the value of those metals to you personally. You will pay taxes if it's a pre-tax account. So the taxes will be paid in the form of a 1099 at the end of the year, just as you would expect. And then we would basically release custody of the precious metals at the depository. And then if you decided to have the depository ship you the metals, you would work with them in order to do that. The next thing we're going to talk about is partnering. And partnering is something that definitely allows people to make investments when they have smaller funds. And the good news about partnering is that this strategy can be used even when you are working with people that are considered disqualified. So remembering that you can't transact with disqualified persons, that's not something that's allowed, but you can partner. And here's the difference. When you're making an investment with a disqualified person, if you're doing it at the outset, so at the beginning of this investment, it's new to you, new to the IRA, and new to the disqualified person, and you're going into it on the investment documents as partners or like tenants in common on the deed, you can make that investment. But if you or a disqualified person already holds this investment and you're sharing or you're selling your IRA a share or they're selling your IRA a share, that would be prohibited. So going into the investment together at the outset would be okay, but doing a transaction would not be permitted. So a retirement account is allowed to partner on a deal with individuals, with LLCs, with trusts, and even other retirement accounts. So that's important because that's a lot of times where the partnering strategies we see come from is IRAs partnering together, and it could be spouses IRAs or parents IRAs with children's IRAs. And a lot of times when I see it in that scenario, a parent's IRA with a child's IRA, it is a smaller amount being invested with a larger amount. And they go into this as partners, and the percentage of ownership is going to be based on the amount of funds each party brings to the table. So especially when it's disqualified persons, and I'll give you an example of where that may not apply, but when you're talking about disqualified persons, it's very important. So, if I put in 5% and my spouse puts in 95%, then I can only receive 5% of the income, and I must pay 5% of any capital raises or expenses related to that asset. And sometimes when you're talking about partnering with IRAs and non-IRA partners, you could consider easing the record keeping with an LLC. And you also want to look at joint venture agreements, real estate investment trusts, and things that will allow you to have this properly structured with the IRA as the partner. And again, those are questions for your attorney. You can partner again into a lot of different investments or asset classes. And when you're looking at partnering, you just want to make sure that anything that you're partnering into reflects the partnership as follows. So Advanta IRA, for benefit of John Smith IRA number 1234, as to a X% undivided interest. And then in this example, John is partnering with Jane as an individual and not her IRA, Jane Doe as to a Y% undivided interest. So again, it's just based on the amount of funds brought to the table. Now, an example of where that might not be the case is if Jane and John are unrelated and not disqualified to each other. Jane is just a friend and they're making an investment together. If Jane is going to handle all of the management but bring a smaller percentage, then maybe there's a joint venture agreement that talks about that as well. So again, making sure that your investment paperwork reflects what the IRA is to receive and for what purpose. And again, if they are disqualified, then Jane would not be able to do that or any of the work on any investment that they make. All of the income and expenses must flow at the same ownership percentage at the same time of the investment and at a set percentage set at the time of the investment. So again, if those are disqualified persons, then that's going to be very important. And remembering again that if you are disqualified and partnering, you can't sell one or the other a share of the percentage or buy one or the other out at a later date. That would be considered prohibited. So in my case study here, we're just going to talk about partnering, and I did private lending. And I think that this will kind of help you guys understand how the partnering works and where you could put a deal together, again, talking about limited funds. So Linda and Paul would like to partner their IRA to lend money, and Paul is working with limited funds. And so they find a borrower and they will lend out $50,000 and they'll have a first mortgage on the property. But again, just keeping in mind that it is not required that this be a first mortgage, a second mortgage, or deed of trust, depending on what state you live in. And it doesn't have to be secured at all. But again, going in and knowing your borrower and talking to your attorney and making sure you understand how you collect if it's unsecured and there's non-payment, or if it's secured by a car or large equipment or whatever it might be, just making sure you understand that investment. Paul and Linda each open an account and find a borrower. They agree on terms, and I'm sorry, I have a couple typos here. I didn't realize that. They're going to read and approve all the documents and send them over to Advanta. We're going to work with the closing agent to ensure proper titling on all the documents and wire out the $50,000 for the closing. Advanta will receive the loan payments from the borrower and deposit them to the IRAs based on the percentage of ownership. So let's say that Paul and Linda are disqualified persons. Maybe Linda is Paul's mother. And so when we receive the payments, those payments are going to be directed to each IRA based on the percentage of ownership, no more and no less. And Linda cannot buy Paul out of this loan at any time because they're considered disqualified. So all of that is going to be really important. Once the loan is paid back, the money is going to go to each of the IRAs based on what they put into it, and now they're ready to start doing loans again. And so, again, this is a very simple example, but if you guys have questions on specific strategies, I'm certainly happy to answer those as well. So I had a question pop up about inherited IRAs. So if you fund a transfer with an inherited IRA, is there a required minimum distribution? And if so, how do you know the amount or percent? So this is a question that has an answer that starts with it depends. Inherited IRAs used to always have a required minimum distribution. Depending on when you inherited that IRA, they may or may not, and also it depends on your relationship to the original IRA holder. If you have an inherited IRA that has a required minimum distribution, then the required minimum distribution is based on the value of that IRA as of December 31st. And that's true no matter where that IRA is located. So the value of it is going to determine what the required minimum distribution is. And we rely on you as the account holder to provide that value to us with a third-party signature on the value every year. So let's say, for example, in this strategy that we just talked about, if it was a loan, then typically the value of the loan is going to be the unpaid principal balance. And if that is the case, then we would enter that value as of December 31st, and then the required minimum distribution amount is calculated based on the December 31st value. Accounts that are inherited after 2020, they no longer have the required minimum distribution typically, because they have to be distributed within 10 years. So you don't have to take a distribution, but it has to be fully distributed by year 10. And I say typically because there are some different rules that apply depending on your age and how you inherit and things of that nature that I won't go into here. But some IRAs that are inherited do not have a required minimum distribution. So I hope that answers your question. We have webinars and seminars every week, a couple times a week, and we also have our own networking event, and that is every other Friday. And actually, I do believe that it is coming up this Friday, but you can confirm that by going to advantaira.com/events. Our networking event is Pitch, Promote, and Prosper, where we have like-minded individuals talk about investments they have or what they're looking for and provide contact information. I also have another webinar coming up next Tuesday on mega Roth contributions to a 401k and backdoor Roth contributions to an IRA. So if you guys are interested in how to get those funds tax-free, please join me next Tuesday, and you can find that again at advantaira.com/events. I hope that you guys will. It's going to be a great webinar. It's been a couple of years since we've done it, so we're going to update that and have good information for you. My contact information is here on the screen for anybody that is interested or has questions. And again, if you would like one of the other webinars that I mentioned, please take my contact information, shoot me a quick email, and I'll make sure to get that webinar over to you. I know I had a few. If you guys could please reach out to me, that would be a great help to me. Again, this webinar has been recorded and we will make sure to send out the recording in the next day or so. I'll give everybody a chance to go ahead and download the slides. If you want them, check out the handouts portion of your navigation and you'll be able to download those slides. And you can, if you don't see that there or you have trouble with it, you can also email me for slides as well. Thank you so much, everybody, for joining me. I really appreciate it. I hope you found some good information in today's webinar, and I hope to see you guys again soon.